All right, this is Trends, Small Business Trends with Lisa Davis of Kennesaw CPA. How you doing, Lisa?
I'm doing great, JR.
Great. Good. Look, we talk a lot, and this world that we live in now for small businesses is kind of complex, right?
It is.
And so it's a lot of stuff going on. And one of the biggest things I would say that people are really focused on is just really how to keep their business even alive and going. Okay, so could you kind of walk us through just just some things that small businesses are just having to deal with right now?
Well, they're dealing with a lot right now in this ever-changing environment. They're dealing with having to change the delivery of service to their clients now if they can remain in business, to move from more in-person services to virtual. That's for service or sales. So there's a lot of change that goes along with that. But a lot of that change can be accomplished just through a good business financial planning strategy on looking at how you've done things in the past, how you can modify it for the future, what it's going to cost you, and can you still remain a profitable business and still continue to survive and move to thriving in this environment.
Yeah, I mean, and I think a key to that, a lot of times, in my businesses, growing up and really running companies and the things in the past, I think you kind of, when you don't have capital, if you don't have those things, you kind of really have figured out ways to kind of really make things happen on smaller amounts, right? So it's kind of like you've been conditioned to be like, oh, it's cool, I can pull. But sometimes a lot of companies, they're always used to having that capital. How do people deal with it now when they may not have the cash flow or the business coming in? How do they survive?
So, it's all part of the plan. You have to look at how sensitive your industry is to change in outside factors within the environment, and then how mobile you can be as a business. It gets a little bit harder as your business grows, get larger. The longer you've been in business, the more it's more status quo. And so part of business financial planning is every year taking a look at your business, taking a look at the different projections of your business based on changes in environment and the modifications that you can make. Maybe it's through a cost containment or a cost management strategy. Maybe you have to look at your staffing and your resources and how can we still provide a valuable product with our clients, but with not as much resources as we had in place before. And then making sure you're taking advantage of the opportunities that are out there. There are different credits that are out there right now for small businesses that are struggling. There are different grants, different things allowed by the CARES Act that they can put in place. Make sure before you make any major modifications to your operations and your staff that you're taking advantage of all those things that are out there that can help the businesses during a struggling time.
You talked about credits, because we're going to get on talking about grants, we're going to get on talking about all those things, but let's talk about the credits. Like, tell me about what are credits and how can a small business take advantage of those things?
Well, there's various tax credits that are out there. There's tax credits for retaining your employees. So there's some retention tax credits. There are tax credits for hiring new employees. There's some tax credits that allow you to defer the Social Security and Medicare that the employee is paying into and the employer is matching into their payroll that can be deferred into the next year or the next quarter to give a business more time to kind of use the cash flow in the way that's best for them.
So these things are not things that happen automatic then? Would a small business need to apply those things?
Absolutely. You have to talk with your financial advisor, talk with your accountant, your CPA, talk with your payroll provider. They're a great resource when it comes to especially the employment credits that are out there, but making sure that you're aware of them. You have to make certain elections to be able to use those credits. And then also know your business location if it's in a what they call an opportunity tax credit location or a low income location. There's some benefits that it's available to your business based on where you're located as well. So make sure you're aware of all those things.
So somebody said, hey, I didn't have those things in place, but can they get them corrected, or like how does that work, or how is the government more understanding now? I mean.
Well, when it comes with the tax credits, they all do come with a timeline. So if you haven't, reacted by certain timelines or deadlines, there may still be some opportunity for do it in the upcoming year. Just make sure you're aware of it and make sure you know what those deadlines and timelines are. And even if you've missed it in the past, there's still some opportunity to use it in the future.
Okay, and and that's a big thing that I think is important, is just looking at, making sure and that you're in the know. And that's something, we've been able to do during this pandemic, is kind of try to inform the businesses so they can take advantage of the stuff within that timely
Yes.
window.
Knowledge is king. We struggle, even with my firm, with the amount of information that we put out, because it's changing daily. So if we put out information one day, there may be a modification 2 weeks from now. But we found it's important to get the information out to people as soon as possible. So we try to get things out either weekly or monthly to give them the information to make those decisions that's going to help their business now.
Yeah, and so, when they're looking at, and that's why you need to have the right, and we talked about before in our other interviews, the team and how important the team is. And so if from your standpoint, what is a good team for a small business right now, even more so right now in this pandemic? Because you may have some new roles in a team that you didn't have a year ago.
Right, and it's important for people to understand the team may not only be just paid staff members. Your team of advisors are the people that you can rely on. They may be friends, family, they may be professionals that are in or outside of your industry, but people you can rely on to advise you, to guide you, to bring some information that you may not have firsthand knowledge of. So for us, when we look at a team, it's important to have someone that is familiar with your industry on the team. It's important to have someone that's a financial expert on the team, both in tax and business, financial planning for your business, not necessarily just personal. It's important to have someone that's kind of a little bit of an HR operations expert that can help you on how your business should be structured, the difference between an employee versus an independent contractor, what that'll cost you, how to set that up. And then just want someone that's a marketing sales advisor that can help you as you're making the decisions on what marketing avenues you're going to use to generate your sales, what has the biggest impact for your business, what the cost looks like associated with that, that sort of thing.
Okay, so really, you're gonna have several different players, several different people that are kind of bring in. How does a CPA or an accountant play into that role? And could you explain to people the differences between that so that they may understand?
So a CPA is a certified professional accountant. That means we've received training in several areas, not only through education, but through certain testing. There's education that we have to do every year to keep abreast of what's changing in our profession and environment. But we're receive training not only in accounting and bookkeeping, what generally accounting accepted principles are, how to put together financial statements for a business, how to analyze those financial statements for a business, tax preparation, tax planning, as well as just business financing as a whole. So with your CPA license, you usually get training in about 4 key areas that could affect any, small to medium size or large business, as a matter of fact.
Okay, that's awesome. So now that we have gotten, we've gotten a basis here, or we've gotten a base, how do people need to plan right now? I mean, it's kind of uncertainty is the norm. So how do you plan in a state of uncertainty?
Well, it's very interesting. Planning is an issue for small businesses, no matter if it's in a good environment, a changing environment, an uncertain environment. We always need to be planning. We always start when we develop our business plan. We started with a vision, and we came up with a plan to help us achieve that vision. For a lot of business owners, it stopped there. And business planning has to be something you incorporate in your business every year. I always say you develop your business plan at the beginning of the year or the end of the following year or the prior year, depending on what you're going to do. So you start that business plan, you review that monthly, and then you adjust and you plan quarterly. So it's always an evolution, because that's how it's going to keep your business relevant and be able to respond to the market and to be able to have the ability to sustain through these troubling and changing times. One thing is going to be looking at how am I delivering my service? What has happened to my clientele? We've had some of our clients that their business have doubled and tripled in this environment.
Totally.
Why? Because people are at home. So what are they at home doing? They're at home on their computer. What's that good for? retail online sales.
Sure,
We have
sure.
seen those clients have doubled and tripled in their business. We've
That's
seen other clients that are suffer because they provide services that require the client to come in. And for them, the focus is, how do I get enough cash flow by using things in the CARES Act, using loans to survive this time? Because it's not like their business model went away. It's just they have to survive the length of time where they're going to have decreased revenues till they can ramp back up to where they were before.
Well, before, because we're gonna jump into utilizing those things in the CARES Act. But before you get in there, why don't you give me that that scenario you gave with the annual, quarterly, the whole planning thing? Give me that again.
So what we talk about when we talk about a business plan is we're talking about, let's do your projections. Let's talk about what your cash flow is going to look like for the upcoming year. Let's look at what your profit and loss is going to look like. And what does that start with? That starts with your sales forecast. How are you going to generate sales? How are you going to retain those sales? How are you going to make sure that your existing client base are going to be loyal and repeat customers? That all is developed with the plan that you then put in place. Once you determine what that plan looks like, then you have to determine what that plan is going to cost you. And then you've determined that that plan can produce a profitable business. And so once you develop that plan, then you're basically every month when you look at your financial statements, you're comparing your financial statements to that plan. And it should tell you a story. That story may say, well, why am I only generating 75% of the sales that I thought I would?
Yeah.
Well, what's going on with my marketing plan?
That's right.
Time for adjustment.
Did I not spend enough money in marketing?
Did I not spend enough money in marketing? Am I marketing through the wrong channels? And my clients are buying online and I'm sending postcards, different things like that.
Totally. And then you said, what did you say about quarterly?
So you're looking at this monthly, but you want to make sure you're at least bringing in those outside advisors at least quarterly, because they're going to help you. Monthly, you can see some of these changes and it's a little bit after the fact and you can make some adjustments. Those advisors are going to bring out maybe some things that you're not seeing in your internal business, maybe things that are happening in the industry or the outside environment. It says, no, you need to be prepared for this. You need to tweak this. You need to adjust this. A financial advisor or a CPA might look at it and say, oh, you're going to run it. Because these sales are not trending where we thought it would, you're going to run into a cash flow issue in months 3, 4, and 5. We need to get on and look at what cash you have available, what access you have to resources, and what maybe you need to get some financial loans and what's out there right now. And the last thing you want to be as a small business is getting to the deficit and determining then you need need access to financial resources.
It's too late.
You need to be planning ahead of time, hopefully a year ahead of time, but at least 90 days ahead of time to make sure you're getting the best opportunity that's out there for loans and not having to take some of these quicker loans that are out there right now that can be upwards of 30 to 40% interest rate.
Totally. And so plan annually, okay?
Adjust quarterly.
Adjust quarterly based on those outside people, and you should be reviewing your stuff on a monthly basis, okay, as a small business.
And being ready to tweak each month as you need it.
Be ready to tweak. A lot of people set a plan is set it and forget it.
No.
Right? and that's such the wrong way to do it, right?
Right.
They spend all this time, making this plan. Oh, I gotta think about this, and then after they finish, they say, that's done. On to the next day. and then they don't realize, hey, that's just where it begins.
Right, and when we work with our clients, that's one of the first things we do when a new client comes in. Okay, show us your budget, show us your plan. And then we incorporate that plan into whatever accounting software they're using to make it easy to generate that report each month. It says, how are you performing as prepared to plan? Because the only thing you can, the only benefit you're getting for that plan is to help you make decisions as you go. And to make those decisions, you have to have the correct information in front of you. You have to compare that plan to your actual.
And so looking at now what's actually happening with all these small businesses, they're looking at ways to, like you were mentioning, there's some businesses that are doing great. Then there's other businesses that are really struggling. So they have all of these different opportunities out here. And all in the CARES Act. I mean, some of them are the PPP, the Paycheck Protection Program, EIDL, these tax credits. Let's talk about what is the PPP. Talk about that, and then we'll go into the EIDL.
Well, the PPP is the Payroll Protection Program. And basically it was a forgivable loan. And by forgivable loan, it means that when you apply for it, you're applying as if it's a loan, but the expectation is if you spend those funds on payroll and other related expenses, it gets forgiven by SBA. And so there's some underwriting that's done with that by the banks, because it's the banks that are making the loans, and then they apply for, once you apply for forgiveness, they get the forgiveness where SBA pays off the loan. So there's some underwriting, but it's very light underwriting. Most people, you know, if you had the payroll out there and you didn't have any major issues going on with your business, as far as bankruptcy or in default on things, you can get the payroll protection loan, which is a forgivable loan again. So basically they look at your payroll either for the 2019 or the 2020 period. They average that payroll by monthly, and then they take that an average month times 2.5, and then that's the amount that you're eligible for the payroll protection loan. And so you go ahead and you apply through that with your bank. You either go with someone that you have a banking relationship with. If not, there's several online providers like Cabbage or Biz2Credit where you can go and apply online for the payroll protection. All they basically want to do is verify that your business is valid. You actually had payroll through the payroll records from your payroll provider, or your quarterly payroll reports. And then they use that to average out the loan. There are some modifications if you were a sole proprietor and didn't have payroll, then it's based on your business profit. If your business did not make a profit and you're a sole proprietor, then you're not likely going to be able to find a way to be eligible for that payroll protection loan. So it's important to reach out to your banking relationships. If you don't, check out the resources online, apply for the PPP, and everybody should try to apply. I see a lot of people, we have this now and we're in the second round of PPP. We're coming across a lot of people who never applied for the first round of PPP because they either didn't understand it or they didn't think they would qualify for it. It's important for you to reach out, go through the application process. Most of the people I've seen applied, at least 95 to 99%, have been eligible to get the loan. Once you get it, use it for the right reasons on payroll, to replace even personal compensation if you're a sole proprietor. Very easy, you know, qualification, simple application to get it forgiven. Do the forgiveness application. You just got a loan that was forgiven that's also tax-free.
Totally.
When this loan first came out, it was not considered to be tax-free. The IRS was going to charge taxes by saying the expenses you used to have the loan forgiven was not going to be deductible expenses. That was reversed by the second CARES Act that came out that says, no, this loan was truly tax-free. So if your payroll was, say, $90,000 a year, or let's say your payroll was $60,000 a year and it's averaging $5,000 a month, that allowed you to have a loan at $12,500 that came to you, that was forgiven, that's no longer taxable. That's $12,500 cash flow to your company. And once you had the second PPP loan, if you qualify for that by decreased revenue, that's a second loan amount that you also have that's now forgiven, that's cash flow into your company. So that's why it's important to know that those resources are out there and to use it.
Wow, that's free money. That, I mean, well, it's a loan that can turn into free money if they did that right.
If they do it the right way.
That is amazing. So before we get into the EIDL, I want to talk about sole proprietorships. A lot of people that I know who are sole proprietorships, which in the Black community is a lot of businesses. And so they have just a lot of times said, you know what, I don't have any employees. I've heard this so much, and they say, I don't have any employees, I can't apply for that. It's like, yes, you can.
Well, the one thing I hear from sole proprietors the most is, I'm not a business.
Yeah.
And I'm like, well, technically you are.
Yeah.
You may not have a legal structure, but technically you are a business. Why? Because the income you receive that you get through a 1099, that's sales income to you. That's business income to you. Because what that allows you to do is to deduct all related business expenses against that income. And then the net of that is what you pay taxes on. The net of that is what's compensation to you, not the full 1099 income. So actually you are a business and you are operating as a business, and those are the people we've seen not take advantage of these CARES Act opportunities the most have been sole proprietors, because they say, well, these are for businesses and I'm not a business. You are a business.
You are a business, and that's the thing. So if you made any money and somebody did not give you a W-2, didn't give you that to where they're taking out taxes for you, you're a business. So,
You're a business, and what the bank is going to want to see is they're just going to want to see that Schedule C off of your tax return. That Schedule C is that business income where you report that 1099 income and you take off your expenses and you're left with a net number. They're going to want to see that Schedule C. They're going to see that net number. That alone can qualify you for a PPP.
And this is another thing, it's get us in a whole different conversation, but people who try to always make sure that they have the lowest amount of profit in their company, now they're hurting.
Well, that's a problem in a lot of different ways. One, if you're over-reporting expenses for your industry and your lifestyle doesn't match to the income you're reporting each year, you're going to eventually raise red flags with the IRS, which makes you then subject to an audit.
Totally.
Two is eventually you're going to want to buy something. It is hard to get qualified for loans, for mortgages, when you've been reporting minimal income from your business on a year-by-year basis. There's still ways to decrease your taxable income but still have income. You can put things into IRAs, HSAs, retirement accounts. All that takes taxable income, turn it into non-taxable income, but it's still income. But if you're getting your taxes down by just over-reporting expenses in your business every year, you're setting yourself up for being at a higher risk, not only at audit, and then at a risk of not being able to get funding, financing, the things you need when you will.
So how do people get in touch with you?
So basically, they can go to our website, which is www.kenesawcpa.com. They can email me at lisa.davis@kenesawcpa.com or give us a call at 678-662-8708. Again, 678-662-8708, and they can get in contact with any of those ways.
Thank you so much.